stop what you're doing. I need to ask you something. 5 years from now, when gold is trading at levels that seem impossible today, there's only one question that's going to matter. And it's not, why did gold go up? It's going to be, at what price did you get it? Look, I'm about to show you something that should make you uncomfortable. Because while you've been sitting on the sidelines, central bankers have been on an absolute buying spree. We're talking about over 1,045 tons of gold bought by the government since 2022. That's almost 37 million ounces of gold. That's equivalent to the GDP of Kuwait. And let's not forget, America went to war to protect Kuwait, which happens to also be a top 10 oil producer. And here's the kicker. This wasn't some speculative trade. This wasn't a quick inflation hedge. No. This was fundamental restructuring of their balance sheets, the government central bankers' balance sheets, a complete strategic overhaul at the highest levels of global finance. Now here's where it gets really interesting. While central banks were backing up the truck, retail investors, people like you and me, were basically watching from the sidelines if you didn't know what was going on. Get this, the GLD, which is an ETF for gold, the shares actually dropped through March 2024. The holdings, they're sitting 26% below their 2020 peak. That means they were net gold sellers, not buyers, and that's a retail trade. Think about this for a second. Gold has surged past $3,300 per ounce, a double in just a few short years. And the public hasn't even showed up to the party yet. But wait, over $120 billion has flooded into the gold funds. That's 3 times higher than any crisis before combined. When institutional money moves this fast, this violently, they're not speculating. They're positioning to protect their own balance sheets. This isn't normal behavior. This is what we call a market dichotomy. And if you understand what I'm about to show you, you'll realize why this is actually fantastic news for your portfolio. Again, if you're prepared. See, let's look at the pattern. What we're witnessing right now, it's not market euphoria. It's not even close. It's now institutional accumulation happening right before the public wakes up. And I've seen this pattern many times before. The smart money phase, it's ending right now. The awareness phase just kicked off in January 2025. So let me ask you, which phase were you part of? Because in January marked the inflection point, the biggest jump in retail gold buying we've seen in years. But here's the thing. The first guests have arrived early to the party, but the venue, it's still mostly empty. The 4 phases, let me break down exactly how these cycles work every single time. Phase 1, institutional accumulation. For 2 straight years, central banks and sovereign funds have been quietly accumulating gold. They drove gold from $1,800 an ounce to over $3,000, and nobody was paying attention. You know what really accelerated this? Basel III. Now stay with me here. Basel III reclassified gold from Tier 3 to Tier 1 capital. What does that mean in normal talk? Banks can now count physical gold as 100% towards their Tier 1 reserves. That's up from just 50% under Tier 3, which was the old rules. This fundamentally changed how the entire financial system values gold, and they didn't send you a memo about it. Phase 2, the early retail discovery. This is where we're at right now. The price action is finally catching some attention. Sophisticated individual investor, maybe you, are starting to build positions. Meanwhile, institutional buying still continues. Price volatility increases, but it's still manageable. This is your window. The next phase is the media spotlight. Oh, you'll know when this hits. Suddenly, every financial network features daily gold segments, YouTube feeds, gold charts everywhere, Instagram influencers, gold ads, your favorite newsletter, they're all pivoting to gold recommendations. During this phase, and I've tracked this, Prices typical surge another 20 to 30% just from information spreading. And then the last phase, it's called the public FOMO, the fear of missing out. This is the final phase, the most explosive phase. And trust me, you'll know it when you see it. Your neighbor, who's a loser, mentions buying gold coins at dinner. Think about this. Your barber's going to be talking about buying gold stocks. Everyone at the office suddenly becomes a gold expert overnight. By this point, prices are often 40 to 60% higher than today. And the best gold stocks, they can move multiple times higher. This is proof from history. Now I know what you're thinking. Come on, does this pattern really work? Let me show you exactly how this has played out in many times before, but specifically this exact pattern. In Bitcoin in 2021, most retail investors bought above 50,000. But when were the institutions accumulating? Under 20,000, same pattern. Tesla in 2020, the public piled in above 800 post-split. Smart money, they were positioning at 200, the exact pattern. Now let's go back to the area where I spent my career, the gold sector. Look, the retail buying frenzy peaked around $850 in the early 80s. When did the initial accumulation happen? Between $40 and $100 by the phase 1 and 2. Again, the exact same pattern. Every single time, the wealth transfer follows one simple rule. From those who react emotionally to those who recognize patterns early. So let's do a serious reality check right now. I want you to ask yourself, are your friends discussing gold allocations at social gatherings? I don't think so. Are financial advisors fielding daily calls about precious metals? No. Do gold channels dominate your YouTube trending page? Not even close. These signals are of retail euphoria, the true makers of the market peaks. They simply don't exist yet. We're not there. We're not even close to there. Look, I've been tracking this sector for 2 decades. And right now I'm seeing a specific opportunity that fit perfectly into what I call the early phase 2 window. I'm talking about companies positioned before the retail wave hits, the exact plays that could capitalize on this pattern, but not crappy little juniors run by a bunch of geologists with a box of crayons coloring where they think the gold might be. I'm talking about companies listed on the New York Stock Exchange. You could buy and sell with volume, liquidity on a real exchange listed in America. If you want to see what the smart money is accumulating, you want to see where I'm putting my own money, click the link below. Get my emergency gold briefing before phase 3 begins. Because remember, 5 years from now, the only question that matters is, at what price did you get it? The pattern is playing out, and the smart money, they're moving in. Don't be the person who watches this video and does nothing. Be the person who recognizes the pattern and acts on it. Remember, if you're not in the room, you're not in the deal.